to skip to sustainability as a service, Dr. Peter Ellington, who's going to take us through some slides on how you kind of do this within your firm. And then potentially, I think we've talked about you potentially working with other accountancy firms to help them get this set up as a service into the future. So I will drive, and if you want to sort of talk us through the next slides, then we'll kick off from there.
Absolutely. How long have we actually got, Tony?
So we are pretty much, we've got probably 5 minutes of the main webinar left, but we can run over. If people want to drop off, they can, and if they want to stick around, then they can. So we are a bit behind, but okay, so just do what you would have done anyway. That's fine.
I'll go for it at speed. Okay, so we're triple bottom line accounting. We're growing at 25% a year, and we're 14 people. Well, I've got 2 vacancies. So we're doing something right, and we're trying to shift into advisory services, and we're using sustainability as one of our primary drivers, but it's not the only one. So next slide. So we've lived through COVID. We're now living through a recession and inflation. And McKay has this cartoon that shows we've got climate change and biodiversity coming at some speed behind us. So if we think we've got some challenges at the moment, or our clients have got challenges and they're asking us for our advice, there's going to be even more coming with these major 2 sort of shifts in the way we are as society and how businesses are and how our economies work. So this, if we thought what we've got at the moment is big, there's more coming and it's bigger. So next slide. So this slide is based on an announcement that was made by 13 accountancy bodies, February 2020, about how they were going to put climate change at the forefront of their work. ICAW, ACCA was in that group of accountants that did that, accountancy bodies, and IFAC supported it. But the accountancy bodies, primarily working with governments, working with the institutional framework, but also making it possible for accountants to get into this area. And then if we move over to accountants, what they said in this announcement is that accountants would also learn these frameworks, but mainly would be giving advice to their clients about how to raise money, how to manage their budgets, their plans, how to stress test what they intend to do in the future as their businesses change and adapt to this major change. And it's like the accountancy bodies, the PABs, are like armies, and the accountants are like soldiers in this war against climate collapse. But and as in an army sort of situation, if you're not volunteering to fight, you're going to be conscripted at some point, because there's so much going on in this space, and the accountancy bodies are doing so much. They're doing it for a reason. It's because the governments are forcing them along those lines, and we're all going to have to shift there at some point, either by being dragged there or voluntarily. So next slide, please. I think we're starting to see a major shift where up until now, we've looked at financial capitals and the capital account and profit, but that's starting to change. So we're starting to see social capital and natural capital starting to be monetized. And this book by Paul Gildings predicted that we'd get to a point with climate change and biodiversity collapse and so on, and it would be like we're tackling a war. And we start developing things like we did with COVID, where we compress the development of solutions much faster than we ever did before. And I think society is in that tipping point. We're on an S-curve of major adaptation. If you start talking to people about climate change, they're all concerned. And at Accounting Web last week, I did a pitch for best advisory service for accountants was to get into sustainability, and I won the pitch vote. So people are aware, and they're aware of that there's a crisis. And this book by John Elkington saying that it's going to be green swans, which is businesses that adapt to climate change and start showing a people, planet, purpose profile. They're going to be the businesses of the future. So next slide. This slide just says, look, we've got the skills for this, but we preferred being in the past, but we need to be working in the future with our clients to help them survive and we actually got to get into the advisory space more, and it's going to happen faster than we think. But we've got that skill set, and we need to be, the critical thinking, the judgment, the structure, being able to structure problems and solutions. It's about talking to our clients and helping them sort of adapt their business models for the future. So next slide. This one, I've got 4 services here. Assurance on the top left-hand side. There aren't enough auditors to deal with the claims that people are going to be making that need to be assured. On the governance side, on the bottom right-hand side, this is for the big businesses at the moment, but it's going to happen to all of us where we have to do more reporting, and our clients are going to have to. And the 2 big areas are for advisory services are net zero, whereby we as accountants can count the carbon, and you can get add-ons. And John was just saying that Sage just purchased Therix, Spheric, and they called it Sage Earth. That's a plug-on, and it measures carbon. And so with that, it's not too accurate, but it's a start point to say how many tons of carbon you're producing a business. And we as accountants can help clients work through how they get on that net zero plan by reducing their carbon, because it's so linked to their finances. A business isn't going to make a change to, I say, putting their energy supply by putting solar on the roof and stopping buying energy off the grid if it doesn't make financial sense. So the net zero plan is linked to advisory. And as I said, we're starting to actually see normal clients, not tree huggers as people would call them, actually normal people just saying, I want a net zero plan because I think it's going to be decisive in how I get business in the future. And that's where we need to be. Okay, next slide. This is the whole advisory pitch. So, setting goals with your clients, doing 3 to 5 year plans. Our smaller clients aren't in this space, but it's a conversation about where you're going in the next 5 years. And around the side here, I've pulled out what's happening. So society is changing. It's normalized now to talk about sustainability issues and climate change. As a consequence, our governments need to be adapting and changing, and they're going to be bringing in incentives and taxes, and we're going to see more and more of that. Our employees, they're going to work for us if they can see that we've got a purpose and we're into climate change and addressing their concerns. We're more likely to get the employee than somebody else would if you can show you've got a net zero plan. Investors, a lot of area. That's what we're saying, where all the pressure's coming from. Natural capital itself, if you're in a floodplain, you've got to get out of it. If you're working in an area which is getting really hot, you've got to put some air conditioning in your building. The paybacks are getting better. That's financial and economics. Technology, you've got clients, say a plumber at the moment doing gas boilers, going to get into source pumps, air source pumps, or earth source, ground source pumps, and getting to a new area of business. And of course, our customers, we're seeing government procurement insisting that 10% of the ITTs are given on the sustainability profile. Local governments are getting more. Charities, I think that, sort of say, for example, the Arts Council, how long is it until they won't give grants out unless they can see the charity's got a net zero plan? So next slide. I'm not going to dwell on this because this is a brainstorm of all those 8 areas. And I'm sort of watching podcasts and reading things up. These are all the various areas, I think, proving that there's this impact, that there's this momentum happening in this space. So if people can take a snapshot of that or look at it later or whatever, I'm not going to go through each one, we haven't got time. So next slide. We're nearly there. So where do you start as an accountant? And this TCFD report from June 2017, it's long, but it's got brilliant tables in it. Now, if you've niched as accountancy practice, so you've got a particular area you're in, there'll be sectors in here that will help you with your niche as to how your sales, how your costs, how your supply chains and so on are going to be affected by climate change. So the guides exist. So you can sit down with your client saying, have you read this guide? This is how your sales are going to be affected. This is how your supply chains are going to be affected by climate change. So if you're niching already, it's perfect. You can get a guide to how to help you. A smaller report to read is from the A4S, which is King Charles's Trust. It's done lots of work. There's loads of resources, but this is a 20-page report. Really easy to read, nice tables. Great place to get started here. And then your accountancy bodies, ACCA, ICAEW, they've all got resources to help you get into this space. But this is 2 areas which you could just start reading. Something nice to read on Boxing Day. There you are. And then finally, final slide. So we've got the powers to save the world. I've written an article in International Accounting magazine on the 10 things that we can do that will make a difference. And we can be climate accountants. So that was the small little presentation.
I like that. Thank you. I found that fascinating. I've heard kind of sustainability sort of talked about as a concept in our industry vaguely in the last sort of 2 or 3 years. But that's the first time I've ever really seen it practically applied to something that you can, filter into your business and let's face it, make money from, right? And ultimately, if we're commercially minded individuals, entrepreneurs and business owners out there, I always say, if you can appeal to what they're trying to do anyway, which is make money, and this helps or furthers that, that's where you'll get the traction. It's trying to fight against people to get them to do the opposite of what they're doing rather than incentivize them. It just, you're fighting a losing battle, right? And I found that fascinating. Joe, do you want to give us any thoughts you had off the back of that? I saw you writing some stuff down then.
I'm going to
while Peter was talking.
I'm going to go and look at that TCFD report and see how I can make a start on that. It's something we've been talking so much about MTD, and I'm like, this is what we should be talking about more. And I want to hear more. And I'm going to be getting Peter onto my podcast and coming to share his wisdom with my community, because I know that there's lots of people in there that want to do more, want to do better. And it's about having that strategy of actually understanding, where do we start? How do we start these conversations? What does it actually look like? And so, I'd love to continue this. Absolutely.
That was we'd already had the conversation internally about potentially doing a much fuller webinar with Peter in the new year sometime to go into it in more detail. So maybe we can all collaborate on that project. Sounds like a good plan. John, any thoughts from you, mate, before we move on?
Yeah, I mean, I guess for us, we're seeing ESG as becoming more and more important for our clients. For some of our clients, because we deal with large clients, they've already been required to do things like carbon reporting in their financial statements and some of the things that are already mandated. I guess from our point of view, like the biggest challenge for us is that, for all of the noise that's around ESG and everything else, is that there hasn't really been a framework that we can kind of stick to. We're sad, boring accountants, right? We need a framework like FRS 102 or FRS 105 or something to help us, guide what should go in the accounts. And when clients start to go a bit freeform, we kind of freak out a little bit about what they're doing with their accounts. So it's nice to see that the ISSB have published stuff recently, and that we're going to start seeing things, from the top down, which will give us more guidance on that. And I guess from a practical point of view, where we've done this kind of work in the past, or where we've talked to clients, is really about saving money, as Peter was alluding to. So, I've got a big manufacturing business that's based out in Bolton that looked at putting solar panels on the roof of their factory about 5 or 6 years ago. They're cash rich, they're in a very fortunate position. And the reason they didn't do it was because at the time, the rules worked that if you put solar panels on your roof, it was deemed to be an enhancement to your building, and your council tax bill went through the roof as well. So it wasn't actually cost effective. Now, that rule changed about 18 months, 2 years ago. I can't remember exactly when it changed. And not too surprisingly, like, our client jumped on that rule change and put panels on the roof because, they consume an absolute ton of electricity every year, and to save money, cost effectively, just makes financial sense, right? It's not, they're not really about saving the world or saving the planet. It's about cost effectiveness and trying to generate more profit. And and that's what it's all about. And I guess there are easy wins in this, aren't there? Things around like advising clients around how to make better use of company cars and getting electric cars into their business instead of driving a pickup, because everyone used to drive a pickup because it was tax incentivized a few years ago. There's loads of stuff around this that you can do from an advisory point of view, and a lot of energy efficiency stuff has enhanced capital allowances and other things like that should just form part and parcel of the day-to-day advisory stuff, and you don't even have to budget as ESG or whatever you want to call it. You can it's just part of being a good accountant or a good bookkeeper